CNBC TV18, embarking on a quarter century of excellence.
Markets will price in continuity and strength in the next government.
At times it is scary to see at what pace market has moved from 20 to 21,000. It's been just a few days, you know.
JP Morgan is overweight India looking forward into 24.
Top investors and market experts are upbeat on India even as they remain cautious about the recent rally. Bulls take a breather on the Lal Street, snapping a 7-day winning streak.
You may have to wait till after the new government comes in July, will be the next full budget, July 2024.
Finance Minister Nirmala Sitharaman says the upcoming February 1 budget is unlikely to have spectacular announcements as it is a vote on account. Adds things will have to wait till the regular budget in July. The government is working on a new EV manufacturing policy with an eye on wooing companies like Tesla and Vietnam's VinFast. Sources say the new policy may look at reducing import duties temporarily. Government officials say no decision has been taken just yet. Sugar stocks under pressure as the government curbs ethanol procurement by oil marketing companies. The move is aimed at keeping sugar prices in check as the overall output is projected to drop 8% this year. 100% of market participants polled by CNBC TV18 expect the Monetary Policy Committee to hold interest rates tomorrow. 70% expect the first rate cut only in the second half of the next financial year. Lending cannot become a merry-go-round, says veteran banker KV Kamath, supporting the RBI's decision to crack down on unsecured personal loans. Adds the new rules are a wake-up call for the fintech industry.
I've been deeply opposed to crypto, Bitcoin, etc. If I was the government, I'd close it down.
JP Morgan's Jamie Dimon lashes out at cryptocurrencies at a congressional hearing in the US, says if he was in the government, he would shut it down. Bitcoin prices have more than trebled since the start of 2023. Akasa Air plans to go international in the first half of 2024 with flights to Qatar, Kuwait and Saudi to begin with. Founder CEO Vinay Dubey says triple-digit aircraft order will be announced in January. Also adds the Rakesh Jhunjhunwala family has no plans to sell their stake in the airline. That's an exclusive. Network 18 plans to merge TV18 and E18 with itself and consolidate the media business. 172 TV18 shares will fetch 100 Network 18 shares. Every E18 share to fetch 19 Network 18 shares. Congress's Revanth Reddy takes oath as Telangana's new Chief Minister. Congress President Mallikarjun Kharge and senior party leaders including Sonia Gandhi, Rahul Gandhi attend the swearing-in ceremony. The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Welcome to the first ever India Business Leader Awards.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
And what a great way to celebrate our own 25th year, with new milestones being achieved on the Lal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high. 25 years of excellence and unparalleled growth.
CNBC TV18, embarking on a quarter century of excellence.
Well, CNBC TV18 is embarking on its 25th year since inception. We would like to thank all of our viewers for your trust, and we promise to live up to the trust that you have imposed in us. Good evening. Thanks very much for joining us on this very special edition of India Business Hour. Let's kick things off with the stock market action. As always, the bulls today did take a breather on Dalal Street. A 7-day winning streak has come to an end. The sensex down over 100 points. The Nifty lost about 30 points. The Nifty Bank Index ended, though, with marginal gain. So that's the story. The Nifty Bank flat, but with a green tick. The auto index higher by about 0.5%. IT and Nifty 50 down in the red today. That was the story as far as the markets are concerned. But we've been speaking with a plethora of market experts. They continue to be bullish on the India stock market story, even though they are a bit cautious about the recent rally. Take a look.
A lot of investors are turning up who have very large portfolios, institutional investors, and want to hedge the May election event. I've opined that the markets will price in continuity and strength in the next government. So that's the market's way. The market does that all the time, by the way. So you go back in time, that's what it wants. It doesn't want change in government. And that's probably what will get priced in when we arrive in May, assuming that the election results are in May. And then if the country produces a result which is contrary to that expectation, I think we have to be prepared for a lot of volatility. So I opine that we could even see a 25-30% drawdown.
At times it is scary to see at what pace market has moved from 20 to 21,000. It's been just few days, you know. So I don't think we can maintain this pace. We need calibration, otherwise wrong things start happening, wrong kind of trades start happening, wrong kind of money starts coming in. So I think we need a little breather. But I don't know what will happen in the short run in the market. Digital era is there, so we have companies which can grow very rapidly. So the complexion of top companies can change the way it has changed in US. I think there is a chance that here also we may find 30-40% growth for these kind of companies, a new normal altogether.
JP Morgan is overweight India looking forward into 24. The backdrop for that is a combination of growth, which we've talked about on prior programs, but also recognition that India is running the highest corporate ROE out of any country in Asia right now. We do see opportunity in the large cap space, particularly in the financials and some of the consumer names. So we do see the potential for the market continue to roll from here.
Every year, FIIs have bought because they also have growth in their AUM because of worldwide growth, some allocation from this sovereign, this, that, whatever. Now the question is whether it will be in full force. The reason for it being in full force might be because of their losing a lot of money and confidence in China. So if that reallocation happens, then the force becomes a real big force. Otherwise, anyway, they should be not net buyers, even in normal situations. Now the difference is there's a domestic buyer against it. So if both buy, then is where the fun starts, which is sort of we are all playing for.
Well, that's the prognosis for the Indian stock markets going forward. Now, the Reserve Bank is widely expected to hold rates when it announces its policy decision tomorrow. The last time the RBI had hiked the repo rate to 6.5% was in February of this year. Ritu is standing by now with the findings of the CNBC TV18 poll. Status quo, as expected, shows the poll, Ritu.
This time around, it is not the rates or the stance that the markets are going to be watching out for, because that's a near given in the current scenario. Rather, markets are on tenterhooks to see if the governor is going to make any other explosive announcements like raising risk weights or open market bond sales. Now, all of the respondents to CNBC TV18's poll expect no change in the repo rate this time around. That is a status quo policy for the 5th consecutive time because of the stronger than expected growth numbers and the continuing inflation uncertainty. In fact, the respondents to our poll have ruled out any further rate hikes in this fiscal year. And as for the first rate cut, while 20% are expecting it by the first quarter of next fiscal, a larger majority of almost 70% expects it only in the second half of FY25. No change is expected in the stance, which is going to be retained at withdrawal of accommodation. Not even an indication of a possible change in stance just yet, because many believe it will be tough to find a consensus among MPC members to shift to neutral just yet. Now, the inflation forecast for FY24 at 5.4% is widely expected to be left unchanged, with just 10% expecting a slight revision upwards. On the GDP numbers, a large majority is expecting RBI to up the 6.5% forecast for the year to between 6.6 to 6.9% on the back of a stronger than expected show in the second quarter. Now, the governor himself is expected to sound more hawkish than dovish in his statement because we're not really out of the woods just yet when it comes to inflation, and risks do remain. Now, on liquidity-related measures, some are expecting clarity on the OMO bond sales, which was announced. They will also watch out for any changes in the standing deposit facility mechanism to tighten policy without actually tweaking rates, and some others are looking for more short-term liquidity-related announcements that the governor could make. Now, as for other prudential measures, the general expectation is RBI could tweak prudential norms where it senses excesses like it did for unsecured loans. Perhaps there will be more standardization of risk weights. The governor also earlier warned about usurious lending rates from certain microfinance lenders, and so the markets will watch for any regulatory action on that front. But all of these may not necessarily happen in this policy itself.
Ritu, many thanks for joining us, and as always, do stay tuned to CNBC TV18 for the live coverage of the MPC. Now, Finance Minister Nirmala Sitharaman has said that the Union budget on the 1st of February is unlikely to hold, and I quote, any spectacular announcements. Speaking to corporate leaders at a CII event in the capital, the Finance Minister said the budget is going to be a vote on account, and that essentially is to meet the expenditure of the current government. Now, that is and has traditionally been the case, but we have had vote on accounts where announcements have come in. But let's listen in to the Finance Minister.
I'm not going to play a spoiled sport, but it is a matter of truth that the 1st February 24 budget that will be announced will just be a vote on account, because we are in an election mode. An election happens during the summer, the coming summer. So the budget that the government presents will just be able to, or would just be a budget to meet with the expenditure of the government till a new government comes to play. So, and that budget, following the British tradition, is called vote on account. So no spectacular announcements are made at that time. So you may have to wait till after the new government comes in July, will be the next full budget, July 2024.
Well, that is the Finance Minister, perhaps reining in expectations. But remember, we have had pretty big announcements coming in previous vote on accounts. We'll just have to wait to see. The dream run in the crypto market continues. Bitcoin prices have more than trebled since the start of 2023, followed by Ethereum, which has risen over 12%. Now, the rally comes on the back of the growing excitement that a Bitcoin exchange-traded fund might get approval soon. However, JP Morgan's Jamie Dimon has expressed his mistrust of digital currency, saying he'd shut down cryptos if he was in power.
I've always been deeply opposed to crypto, Bitcoin, etc. You pointed out the only true use case for it is criminals, drug traffickers, anti-money laundering, tax avoidance, and that is a use case because it is somewhat anonymous, not fully, and because you can move money instantaneously, and because it doesn't go through, as you mentioned, all these systems have built up over many years, know your customers, sanctions, OFAC, they can get bypass all of that. If I was the government, I'd close it down.
Well, that is Jamie Dimon there reiterating his opposition to cryptocurrencies. Now, the Union government is working on a new electric vehicle manufacturing policy with an eye on wooing pure EV players with a global reach and scale. We learned from sources that the new policy may look at reducing import duties temporarily. Parikshit Luthra is standing by to tell us what could possibly be in the works. Parikshit, what's the government's thought process?
The Indian government and Elon Musk's Tesla have been in talks for some years now, and we believe that now the talks are in a final stage and possibly there could be an announcement by the end of January. What Tesla has said, they are willing to commit up to $2 billion for the India market as far as investment in manufacturing goes, but they are seeking a temporary duty reduction from 100% currently on fully built cars to 15% on 30,000 cars per year for a temporary 3-year period till they are able to begin manufacturing. India has made it very clear that no policy concession, no policy tweak can be for Tesla alone. If it happens, it will be for the entire EV industry. So we believe that top 5 leading luxury car makers have been consulted by the government. They are now working on the contours of a new electric vehicle manufacturing policy, where unlike the FAME scheme or PLI, the duty concession on fully built cars, import of such cars would be dependent on the investment that you are committing to. So, for example, if a company commits to investing a certain amount of money for the India market, then the Indian government could give a concession from 100% to 15% for a 2 to 3 year period till the company begins manufacturing. That company may be asked to submit a bank guarantee, and the government would be liable to encash that bank guarantee in case the company does not begin manufacturing within a stipulated period. But this is only being considered right now. No final decision has been taken. We reached out to our sources in the government. They did not comment and said no final decision has been taken on deliberations. But there is a lot of concern among Indian automakers as well as to what kind of impact will this have on localization push. But all of this is being done. This new policy is being considered to make sure that the likes of VinFast, Tesla and global EV manufacturers get a somewhat level playing field when they enter the India market and don't come to India with 100% duty on sales operations from day one.
Okay, so that could be in the works. Thanks very much, Parikshit. We also learned from sources that Tesla could announce operations in India by early January. Government officials have declined to comment on CNBC TV18's report and said the decision is yet to be taken, once again with the caveat that this is all on the table. No decision has been taken just yet. But speaking of decisions that have been taken, the government has curbed ethanol procurement by oil marketing companies, and this move is aimed at keeping sugar prices in check as the overall output is projected to drop 8% this year. Sugar stocks were under pressure in trade today. Sonal Bhutra joins us now to take us through the likely implications of this decision. Sonal.
Thank you so much for that. Well, it has been notified that the government has asked mills to not use sugarcane juice for ethanol output for 23-24. Remember, it's only sugarcane juice which is not allowed. Companies will be able to actually procure or supply ethanol for existing offers received by OMCs from B-heavy molasses, which will continue to make ethanol. Now, disallowing sugarcane juice route to produce ethanol, it would result in lower diversion towards ethanol, and that is something which the sugarcane stocks were under pressure for. Now, DAM Capital had written a note earlier today, because earlier the idea was, and the report suggested, that it would be for both sugarcane juice and bee molasses, but the final policy is slightly on the positive side, where only sugarcane juice is not allowed. They said sugar production in Maharashtra and Karnataka is likely to decline by 30%, and this would result in India-level gross sugar production of less than 32 million tons. Now, sugar companies, they've already contracted for ethanol supply for 6 months, starting from November to April 2024, and this measure would result in significant reduction in ethanol volumes for FY25. They believe that these measures are, of course, temporary because of lower sugar production that we've been seeing and higher sugar prices as well. And ethanol production from June, from the juice route, would be restored in the 2024-2025 season. However, they calculated some amount and they say it would impact ethanol volumes by 30%. And do remember, sugar companies get a big margin coming in from ethanol production only. Overall earnings estimates for FY25, they say, could come down by 10% because of this particular policy. They, however, say that sugar prices are likely to remain at the 38 rupees per kg mark. There is lower sugar production and also low carrying sugar inventory at the start of the year. However, they say government could increase prices of C molasses so that can be used to produce ethanol, and that would be something which would give higher margins to sugar producers. But yes, overall it has come as a bit of a dampener for sugar companies.
Sonal, many thanks for joining us. And staying with action from the markets, Paytm has seen its second biggest fall since its listing, while Tata Power soared past 1 lakh crore rupee mark in market capitalization. Meanwhile, the aggregate market cap of state-owned firms has zoomed past 50 lakh crore rupees. Yusuf is here with all the stock action on the Lal Street. Yusuf.
Let me start with Paytm. Shares tumbled the most in 2 years after the fintech firm said it will reduce small ticket loans due to macro uncertainty and regulatory gainers. The stock plunged 20% to mark its second biggest fall since listing. Now to the gainers. Tata Power joined the 1 lakh crore market cap club, becoming the 6th company from the group to achieve this milestone. The largest group in the country now commands an aggregate market cap capitalization of 27 lakh crore rupees. Another one in my list is LIC of India. The country's largest insurer reclaimed its 5 lakh crore market cap today. The insurer had lost this crown within 3 weeks after listing in May last year. In fact, the entire PSU basket has been on a dream run. Over the last 1.5 years, the combined valuation of state-owned firms surged by 23 lakh crore rupees to 50 lakh crore rupees. Interestingly, the outperformance, which started with banks, spread across other sectors as well. Nearly 25 PSU stocks have seen their market capitalization surging over 2 to 3-fold since the beginning of the year. The list include REC, Power Finance Corporation, Hindustan Aeronautics, IRFC, and many others. Thank you. Back to you.
Yusuf, many thanks for joining us. Up next on India Business Hour, Akasa Air plans to go international in the first half of 2024 with flights to Qatar, Kuwait and Saudi. That's to begin with. Founder CEO Vinay Dubey says a triple-digit aircraft order will be announced in January. Catch all of CNBC TV18's news and updates on WhatsApp, Facebook, X, Threads, Instagram and JioCinema. Well, you're still watching India Business Hour. Lending cannot become a merry-go-round, says veteran banker KV Kamath. Speaking with Lata, Kamath supported the RBI's decision to crack down on unsecured personal loans. He also added that the new rules are a wake-up call for the fintech industry. Take a look.
We need to understand what is the impact of lending. If lending is a merry-go-round and it is basically washing the debt that was there, I don't think it is good news. And the pace at which things were growing, as a banker, I would think was giving a signal that maybe there's some need for caution. Then came the second issue where we found that there probably were multiple loans that a borrower was taking. And thirdly, a point that he's probably approaching other people for even more loans. It doesn't stop there. And to top it, the fact that look at the NIM margins, NIMs that some of the NBFCs were having. At those NIMs, you need to have a bit of caution. So to me, there were cautionary signs, and Reserve Bank has done well in tightening the requirements.
Well, that's KV Kamath. And on to another exclusive. Akasa Air will start its international operations in the first half of 2024 with flights to Qatar, Kuwait and Saudi to begin with. In a conversation with CNBC TV18, the founder CEO Vinay Dubey revealed that a triple-digit aircraft order will be announced in January. He also said that the Rakesh Jhunjhunwala family has no plans to sell its stake in the airline.
The destinations that we're looking at are Doha, Kuwait, Riyadh and Jeddah. And that's to begin with, by the way. But we're looking at flying to multiple places in the Middle East in addition to these, and multiple places all across Southeast Asia. You should see us fly to these international destinations. If at all there was a requirement for a fundraise, it would be associated with our 3-digit aircraft order. And by the way, I can tell you that that's imminent as well. It might slip into January. We hope to close it by the end of the year. It might slip into January, which is not a big deal. Don't read anything into it because that is going, extremely well. This was a big deal for the late and great, Rakesh Jhunjhunwala, right? He took a bet in Akasa. This was a big deal. Akasa is part of his legacy, and the Jhunjhunwala family is, absolutely not looking to divest. In fact, the Jhunjhunwala family is as committed to Akasa's success today as it was, multiple months ago.
Well, that's Vinay Dubey of Akasa. Network 18 Media and Investments has announced the merger of its television and digital news businesses into one entity. The move is part of Network 18's plans to consolidate and expand its business in the media sector. Mangalam is here with us. Mangalam, take us through the contours and the implications.
A mega media merger, that's exactly what is taking place. TV18 and E18 will consolidate with Network 18 in a merger to bring together the television, digital, media and news dissemination operations under one umbrella itself. The idea here is to build a media powerhouse that combines the strengths of all the three giants to bring you an unparalleled multimedia experience. So to start with, let's tell you what the portfolio of each of these organizations or each of these companies encompasses. We have 20 news channels and in 16 languages, along with the CNBC TV18.com website under TV18. Under Network 18, we have the News 18 platform across 13 languages and the insightful firstpost.com. E18 owns and operates the widely used Money Control app and the website, whereas Viacom, which remains a direct subsidiary of Network 18, offers a portfolio of 40 TV channels and Jio Cinema itself. And that's not all. Network 18 will also continue to hold its investment in the ever-popular Book My Show. Wondering about the numbers here? Well, let's tell you that as well. The merger ratio is set at 100 Network 18 shares for 172 TV 18 shares, which is at par with the previous closing prices of these shares itself. And E18 shareholders will receive 19 shares of Network 18 for every 1 share that they hold. The best part, reported consolidated financials will remain unchanged. But there will be a slightly higher public shareholding of Network 18 post the merger, and that's where the big change happens. So promoter holding of Network 18 right now is 75%. Post merger, it comes down to 57%, and as a result of which public shareholding increases from 25% to 43.1%. So the question is, what could be the key rationale behind this integrated entity? Well, it promises not just news, but a seamless blend of cost and content synergies as well. From revenue synergies coming in through, bundled sales for options and also ad sales coming in, to cost synergies as well, which will be achieved through unified operations and content procurement. At the same time, the ecosystem synergies, which will come in with diverse offerings coming under one umbrella itself. The state would also be interested in how this entire piece plays out in the future with both the integrated internet and cable technologies of the parent group too. Obviously, as we're talking about this, the disclaimer is that TV18 is the entity that houses CNBC TV18, the channel that you're currently watching.
Mangala, many thanks for joining us. And with that, it is time for us to wrap up this edition of India Business Hour. But before we go, it is our birthday. CNBC TV18 is entering its 25th year. When we first began broadcasting, the sensex was at 4,500. Today, it's near 70,000. The size of India's economy was $400 billion. Today, it's close to 4 trillion. We've been chronicling the India growth story for a quarter of a century. All of this thanks to you, our viewers. Thank you so much for your trust and for watching us. For your unwavering support. We will keep at it every day and promise to live up to the trust that you've placed in us. Thanks very much for watching India Business Hour.
CNBC TV18, embarking on a quarter century of excellence.